This always happens before a market crash and the signal just triggered again. 3 times in the past 20 years, a market signal appears and it's always been followed by a precipitous pullback in the stock market. And if you're holding a 401k, a pension plan, or anything else like that, you're going to want to pay attention because you need to stay ahead and stay vigilant of what triggers might be out there that might cost you a lot of money, particularly if you are retired or are within 10 to 15 years of retirement. So here's exactly what I'm talking about. In 2008, the market sign appeared, and within weeks, the S&P 500 dropped 38%. In 2020, the same signal appeared, and the market went on to drop 33%. And right now, in 2025, the same signal has appeared all over again, and I'm giving you a heads up just so you're aware and you're vigilant of your monies, because nobody's going to look after your money like you are. And I'm most definitely not here to scare you as much as I'm trying to get you aware that this is something that Main Street should be aware of, and we're here to look out for people like you and me right here on this channel. You see, when these signals occur, Wall Street always has built-in circuit breakers that wind up saving them a ton. I mean, I'm talking about the liquidity of their funds, so they're able to buy back in at lower prices when they hit. And what does Main Street have? Well, Main Street, in the meantime, has a little bit of hope and a prayer, and that's about it. And we are expected to ride out the storms when these market signals trigger. So here's a breakdown of what the trigger actually is, what the trigger looks like, and some of the steps the experts take that protect their assets before the big storm hits. So if this helps you avoid one bad financial decision, hit like and hit subscribe so we can continue to deliver meaningful news right to your inbox on a regular basis. It doesn't cost you a dime, and it does a ton to help the channel out. And of course, I'm able to provide information to you on a daily basis. In a healthy economy, long-term money actually costs more because money is tied up for longer periods of time. But when big money gets nervous, other things happen. Capital floods into long-term treasuries, pushing long-term rates down, and short-term rates stay put. When short-term rates go above long-term rates, that flip is called the inversion. And that flip has always preceded a recession, and that has happened every time since 1955. So we're talking over the past 70 years. This has been an accurate predictor of what's going on in the economy. But wait, there's more. Number 2, who gets fired first? Who gets hit first? Well, I'll give you a hint. It's not the hedge funds. It's also not the bankers. You guessed it, it's Main Street. Regular people refinance too late, and they're always left holding the bag. The inversion is not the crash. It's the countdown timer, like before a football game ends. That's when it's time to head to the doors. And of course, it's Main Street that often misses the signals. And of course, to be aware, there is a third part to this equation, because there is a pattern before every crash. Number 1, the yield curve inverts. It's happened already. The markets often continue to still go up during this time period. And of course, when the markets keep going up, there's always a false sense of security. Retail investors always have FOMO here. Yes, they're worried about the opportunity to make a couple extra percentages on their 401k plans, their 403b plans, but they miss the bigger picture. Because this is when the liquidity freezes, and that's when the market crashes. And without a doubt, Wall Street's buying back these assets. When the market crashes, they're buying things on discount, and who's taking the bath? Well, you better believe it, it's Main Street. So if things feel okay right now, that's exactly how it felt each time before there was a crash. In 2008, somebody with $50,000 in a basic 401k plan dropped all the way to $32,000. It's not because they picked bad funds, it's because they had their money in the market at the wrong time, and they're the ones who took the bath. And of course, they were exposed while the big funds moved to the sidelines to let the market correct itself. In 2020, the same thing took place. Retail accounts got hit first. Meanwhile, insiders rotated the cash and sat on the sidelines, once again waiting for the market to correct itself. Then they started bottom fishing the market prices all over again. So this really isn't about panic. It's most definitely not being about the last person standing either. I don't want any of the viewers here to be the last people standing as the music continues to play and there's no place left to sit. So here's the simple Main Street playbook. Let's call this your to-do list. Number 1, keep cash on hand and don't be afraid to pull some of your monies out of the market and put it aside in a more safe investment. Number 2, do a 60-day review on anything you plan on refinancing, whether it's a house, whether it's a car, whether it's a HELOC that you might be in right now. And number 3, consider the barbell approach. Secure your assets on one end, and of course, on the other one, consider your growth assets, how they're positioned, and the opportunity to take advantage of this when it takes place. Don't chase AI stocks right now. Oftentimes, AI stocks and crypto peak right around the time, and of course, people are chasing profits when they should be rethinking a better opportunity to buy these stocks instead of buying them at high prices. And number 2, don't assume that somebody else is looking out for you, because while there is mutually assured destruction, just know that there's a very, very savvy group of people who do this for a living, and chances are they're not looking out for the little guy first. They're usually looking out for the big guys, and they're always looking out for their own skin. This really is more about planning and less about panic. And here's a quick note. If you're preparing financially, then you want to make sure that you have a financial protection for your family. Your family always comes before chasing returns. So does your legacy. I use Policy Genius myself. Link below, it's free to check. And even a basic policy gives your family a little bit more breathing room, and that breathing room makes all the difference in the world, and most of all, it gives you peace of mind in these types of situations. Now, let's close this channel out. Now, of course, when it comes to credibility, there is probably the most credible person on the market right now. That would have to be Warren Buffett. What does he have to say? Warren Buffett says that you only find out who's swimming naked when the tide rolls out. That's a great image to consider if you think about it. The inverted curve is pushing back right now, and soon we'll find out who has no swimming suit on. The question is, will we pretend not to see this, or will we take this as a sign that maybe it's time to pump the brakes and move a little bit of our cash over to the side? After all, who wants to be caught out in the surf with nothing on? In my next video, I am breaking down how China and the trade war is actually going to impact this. Because when trade costs more, liquidity tightens. And that's just when the signal actually starts turning into something much deeper, like market pain. And if you want to make more sense of the trade, then go ahead, hit like, hit subscribe, make sure you're getting the next video delivered right to your inbox. And I want to remind you folks that the biggest battle you fight is the one between your ears, over your thoughts, your actions, and your attitude. Make sure you say hi to somebody, make their day, and it doesn't cost you a dime, and it does everything to make this world a better place. And I'll catch you next video. Thanks for joining me.